Markets in Asia-Pacific were subdued in Tuesday trading off the back of weak economic data from Asia. And this is despite US President Joe Biden considering cutting tariffs on Chinese goods. The Shanghai Composite is down 1.64%, and the Hang Seng in Hong Kong is down nearly 2%. The Japanese Nikkei is also in the red as Japan's manufacturing activity for May increased at the slowest pace in 3 months amid supply bottlenecks. Auto giant Toyota Motor announced it will cut global production by around 100,000 in June due to semiconductor shortages. Toyota's stock is now down 0.6%. And in China, Goldman Sachs says it expects more real estate defaults. 22 high-yield bond issuers, all related to the property sector, have either defaulted on their US dollar-denominated bonds or deferred repayments with bond exchanges since the start of this year. To understand more, let's bring in Craig Erlam, who is Senior Market Analyst at OANDA. Craig, many thanks for being with us this morning. First of all, let's start from Japan, because we've seen manufacturing activity expanding at the slowest pace in 3 months, but at the same time, activity in the services sector has actually improved for the second consecutive month on stronger domestic demand. Do you expect this to be some sort of an inflection point, and then data will really have a possibility to pick up from now on in Japan and in Asia?
Well, I still think this is going to be a very challenging year for the economy. So I do think we could potentially see services take a hit at some point as well. But I think the fact that manufacturing is taking a hit now is just a reflection of the current environment, whether that is supply bottlenecks, as you've already alluded to, but also COVID continuing to have a dampening effect domestically as well. So I think that could also be contributing to the slowdown that we are seeing in the manufacturing space. We are still seeing growth as per the PMIs, but at a much slower pace than what we were seeing previously. The services sector is going to be an important one going forward. I think people are still looking to utilize these services, which have been obviously hampered at times over the course of the last couple of years. But ultimately, it's going to be important that the economy holds up. We know that imported inflation is still an issue in Japan, even if it is to a far lesser extent. And supply chains are going to continue to be a headwind for many of these areas of the country, especially in the manufacturing space.
Absolutely, Craig. And I mean, in all this, President Joe Biden floating the idea of cutting tariffs on Chinese goods. How do you expect US stocks to react in the first place, but also Chinese stocks?
Well, I think there's so much contributing to sentiment in these markets. We saw a late sell-off in the US overnight in the after hours, and that's driven by the tech space, with Snap effectively preparing for worse results in the current quarter, and potentially that's contributed to the declines that we've seen across Asia as well, just by this broader sentiment picture showing that we are still seeing massive vulnerabilities. But then also on the Chinese space, we're looking at more cases of COVID in Beijing, and then there's the prospect of tighter restrictions there as well on the back of that, as well as in other regions as well. A lot of the focus recently has been on the reopening of Shanghai, and that's been a positive point. But we are just reminded that there are going to be constant setbacks when you're running a COVID zero policy like China is. And therefore, Beijing, I think, is a concern for these markets. And I think we're seeing that having a dampening effect this morning, despite the prospect of some of these tariffs being lifted by the White House.
Craig Erlam, many thanks for your update.